Hello everyone, I'm Corey Mitchell with TradeThatSwing.com, and in this video we're going to look at the day trading success rate, the real answers and statistics. So a little bit of background: back in 2005 out of university, I started trading with a proprietary day trading firm. And basically how it worked back then, this was like on an actual trading floor. We had, just lots of people sitting there trading. The company provided us with some funds, and our risk was super controlled at the beginning, and then as we showed profitability, basically we got more capital. Our daily stop losses moved up in accordance with our daily average profit. So, if you were averaging $500 a day, basically if you lost $500 in a day, you were stopped out for that day. There was no specific set limit in terms of how much you could lose like there are on the firms now. Most of these online prop firms, if you lose 5% of the capital they give you, you're done. It didn't quite work that way, but basically if you lost more than you were supposed to on a day, we called it blowing up. So at the start it was very small. Basically you basically had a couple $1,000s and you could lose $10 a day. So it was very much like the smallest position sizes you could trade, and you just had to start making money. So we'd sit there. They didn't really give us much guidance on strategy. It was just, sit there, watch a couple stocks, and we kind of had a little bit slower moving stocks. Back then there was one that's gone now, and then also Walmart I traded. And it was basically just watch the price action and see opportunities where you can get in with a low risk, kind of like these turning points, and just make more money than you lose. And if you made money, then the next day you could lose a little bit more, which means you could take bigger position sizes, which means you could potentially make more. And this was the process. And hundreds and hundreds of people would come through, and most of them could not make money. So that's what this is about. It's the statistics I saw from hundreds and hundreds and hundreds of traders. I also knew some people who ran other prop firms. Ours had multiple offices, and then I also knew a guy who was running one in the States, and talking from him, they also had hundreds and hundreds and hundreds of traders. So we basically got down to these percentages where about 4% of the people who came through could actually make a living off the market. This actually became their job. Now, think about this for a second. These are people who came. This was on an actual floor. This isn't just like an online, where you kind of do it as you please. They wanted us there, trading. And so we had access to loads of traders already on the floor who were making money. We had access to capital if we continued to increase our profits. We had a risk manager there telling us hey, you're getting close to your limits for the day. What are you going to do about it? We had to send emails if we blew up. We had accountability in terms of our performance and when we made mistakes. So these were people, myself included, who dedicated a ton of time. I was also working part-time in the evening, to pay my bills while I was learning to day trade. And so, working nights basically, and then getting up early to day trade. So it was stressful, but I was putting pretty much everything into this, that this is what I wanted to do. And most other people were doing it too. They were coming in every single day, sitting in the office for 6-7 hours, and if you blew up for the day in the first 5 minutes, you sat there and you watched the charts, figured out what you did wrong, tried to figure out better ways of doing things. So these were people that were very committed. We went through multiple interviews, and set aside. We paid some money for books and our initial kind of training just on how to learn the platform. So it was a big time investment, and basically you had all the advantages in this situation, and yet still only about 4% of the people who came through, who went through this whole process, going through the interviews, putting up some cash, sitting in the office all day, having access to the pro traders who were doing it, and still only about 4% could actually make a living. That does not mean a great living. It just means that they could do it as a job. Of course, there's, just like anything, there's a dispersion. Making a living can mean the poverty line, which a lot of people were on, and then you also had people making really big amounts of money. So there's also that range. So just making a living doesn't necessarily mean you were rich. It just means you could make enough to pay your bills, and basically that 4% were the amount of people who stayed at the firm and kept trading. There was a larger group who could make some money, but if you're trading for a couple hours a day and only making, depending on where you are in the world, different amounts of money mean different things to different people. But, in the Western world, if you're only making like $100 a day or something, it might not be worth your time. So there were people in this bracket who made some money, but it just wasn't worth their time, even coming in for part of the day or something like that. So this group was about 10 to 15% of people who came. I'd say more toward the 10% level. And again, this was basically with all the perks. People who could, they were coming in, they were working hard. Well, I don't know how hard they were working, but they were at least coming in. They had access to people. Most people did not take advantage of that. They had access to professional traders and just couldn't do it. On that note, I found it quite interesting. There would be people who would come and sit beside me, and they'd basically try to mimic what I was doing. I'd have a great day. They wouldn't have a great day. And it shows how dynamic trading is, because most people think of, well, if I could just get in where Corey gets in, I can make money. Or if I just get out where Corey gets out, I can make money. But there are finite amounts of lots in Forex, finite amounts of stocks in the stock market, finite amounts of futures available at any second. So if I enter a trade, the person sitting beside me is getting in like a second or two later, that might mean a different price. They might get worse slippage. And then, it's happening on the exit too. And that's the fine line between profitability and unprofitability. Is just like if you start shaving off just a little bit on your profits and your losses are maybe just a little bit bigger, that can turn a losing or a winning strategy into a losing strategy. There was also the issue of, I'd get in and I'd get out, and then the person, of course, with their own psychology and thinking would be like, no, I don't want to take this trade, or I am going to stick with this trade, and maybe it was a loser and I got out for my small loss, and they're like, no, I want to hang on to it and see if it comes back and improves a little bit. So even when trying to do exactly the same thing, sitting right beside me, most people they couldn't replicate the results. Because the market is so dynamic, and you have your own stuff going on in between your head, where even if you say, or a lot of people when they say, I'm going to follow this method, they don't. And that's the problem, is why the success rate is so low, is because people do not follow the strategy they're supposed to, which has shown a profitable edge. So even if they were sitting right beside someone who was successful, none of these people could do it. The ones that were successful were the ones that were able to eventually get the discipline to follow the system, whether it was theirs that they created or someone else's. A lot of this has to do with what I call, I'll give it a try mentality. This is especially popular among men. The success rate was much higher among women because there were a lot fewer of them that came to the firm to begin with. And when they did, they were like, this is what I'm going to do. I want to do this. I'm going to put in the work. I'm going to ask the questions. Kind of like the old analogy of the what I found at least was, if you're driving around, women are more likely to pull out the map and say like, okay, where are we, and try to figure out a way out of it. Whereas guys are more likely like, no, don't show me the instructions, don't show me the map, I'll just do it myself. And so they just keep bouncing around from thing to thing, whereas the women were more like, if this is working for you, I'm going to do this, show me how to do it. And they had more follow through on doing it. Guys were a lot more of this, I'll give it a try. I've heard about day trading, I'll give it a try. I'll give it a few months and see what happens, which is a really wrong, not necessarily a wrong mentality. It is whatever mentality you have, but the people who really came in and said like, this is what I want to do and I'm going to do it, were the people that had a much higher chance of success. Most of the people I talked with that didn't succeed, they weren't there that long, were very much of, well, I'll give this a try while I'm, looking for another job or something like that. It was not a highly vested interest, or they were just giving themselves self-confidence. They were talking themselves up, saying, I'm going to be really good at this. This is what I'm going to do. But it's a false bravado. It's just talk. They were talking about the what. They were telling themselves, I'm going to be very successful. I'm going to be very rich. I'm going to be a great day trader. But they weren't talking to themselves about the how. They weren't talking, because words really mean nothing in that sense. It's when we're just falsely building ourselves up. What we have to do is start thinking about, how am I going to do this, and then following that. So really brainstorming, like, I see this as difficult, I accept that. What can I do to improve? And that means looking at our own mind frame. That means looking at our trades and saying, what were my mistakes here? What happened here? Was there something going on in my mind that caused me to maybe lose much more than I should have? They really dug in. They looked at the how. Whereas a lot of people, these I'll just give it a try people, they might have seemed confident, but they were really just kind of building themselves up with this false confidence, which really did nothing. When people came into the firm, and I see it online loads, is they see all these successful traders posting their charts, their results, whatever, so they think, oh, it must be easy. You also look at a chart in hindsight and say, oh, this stock had a big move, or this currency pair had a big move. Look at all that money that was there to grab, so easy. So this is called availability to a bias. It's what you see most often becomes sort of your reality when you're actually missing part of the picture, because you're only seeing the success because those people are still in the game, whereas you're not seeing the thousands and thousands and thousands of people that didn't do well. They're not really talking about it. Maybe they tried trading for a few months and then left, or maybe they've been doing it for 10 years, but they're not really talking about it, and no one's really listening because they haven't been successful. So they're likely not going to have a huge following. You're less likely to see them. It even extends to like stock indexes and things like that. We view the stock market as always going up because the indexes go up, but that is also an availability bias because the stock indexes continually drop the companies that aren't performing as well. So what you're left with are the companies that did perform well. So unless you're in those companies or in that index, following it, tracking it, invest in something that tracks that index, you're not going to get the index returns because it's not actually like the average. It's not the whole stock market. You're missing a whole bunch of those stocks that went bankrupt and would have dragged the index down, but because they're not included, all you see is the end result of these companies that are still doing good on the list. So how do we get into that 4% or even the 10% if you're looking just to, you might not be looking to make a living off trading, you just want to make a little bit. So that'd be kind of that 10%. And remember, there's a big range of incomes even in this. The bottom part of this 4% is living on the poverty line, whereas the top fraction of that 4% is making millions. So I would at least want to trade. Do this because you want to, because you're going into it for self-growth and inner reflection. It may be a little bit about money, but really, and it was for me when I started, it was just a job, but I really enjoyed it and I wanted to do it. But over time, I found that trading forces you to look internally, and it's really about self-growth, because trading will trigger you. It will pinpoint every single weakness you have in your personality and exploit it like crazy. So it becomes very much about filling in those holes, developing boundaries, getting more discipline. How do we do that? How do we change sort of our internal identity so that we don't need to rely always on just being disciplined? We can actually kind of start changing who we are so that we can follow our plan. And I consider it this, I think of it this way. I have lots of articles on this under the trading improvement section, which talks a lot about psychology. Is if a lot of people think they need a lot of discipline to trade, which is true at the start especially, but as we start to notice our mistakes, we can work on our internal nature. And so I view it like this. Someone who doesn't smoke does not crave a cigarette. They do not have to have discipline to not smoke. It's just not who they are. Whereas someone who does smoke does require discipline to not have a cigarette, right? So they're constantly relying on this discipline type muscle, which gets weak, and then of course we cave in. Same thing with food. Someone who does not view themselves as an unhealthy eater, they just kind of eat to live, they don't have to have discipline not to eat junk food. Whereas someone who really views themselves as a pleasure eater, they're going to have to use discipline constantly, and it's going to wear out sometimes. They're going to cave in to those cravings. The difference is in how we identify ourselves. If we do not view ourselves as a smoker, we're not going to crave a cigarette. If we don't view ourselves as a junk food eater, we're not going to crave junk food. No discipline required. So the same thing happens in trading, is we are who we are to start with. We might be impulsive, we might be a gambler, we might be a perfectionist, and we never end up taking any trades. There's all sorts of issues that can develop, and at first we start to use discipline to try to overcome these things. But over time, we can reinforce the traits that we want within ourselves, that we require less discipline, so that it's just trading and following our plan is who we are. It's not something that requires discipline. It's just, I'm a plan follower. That's who I am. That's how I identify myself. And we can do work to instill those beliefs and get rid of beliefs that counteract that. So a little bit of a tangent there, but just talking about, like, you want to trade and you want this kind of internal growth, because it's going to happen either way. And if you're not that type of person who really wants to grow personally, then trading is not for you. Don't bother. Traders love Mondays. They look forward to doing what they do, and so at least want to trade. I would dedicate at least 6 months to learning just one single method. It doesn't even matter what it is. It could be the worst method in the world, but the point is, if you can follow a crappy method, then once you improve it, or you find a better method that you like better, you have the skill set to actually follow it. But if you continually jump around from strategy to strategy, trying this out, trying that out, trying this out, then you're actually making a habit of the wrong thing. You are not building focus and learning how to do one thing better. You're continually just jumping from one thing to one thing, never getting good at any of them. So you're practicing the wrong thing. On the topic of practice, putting in hours is not practice. I know a lot of people who stare at their charts for hours and hours, and that doesn't necessarily correlate to actual practice. We want a methodical process to our practice. So what does that look like? We want to review our mistakes. So with day trading, I would take screenshots every day, look at my trades, where it was in terms of the price action, and then I'd brainstorm. If I had a really bad day, I would brainstorm, how could I do this better? Then I'd go through other charts. So, you have a whole bunch of these screenshots you've taken, and you go through them, and you say, in this specific kind of circumstance, I've noticed I generally tend to lose a little bit more. So I have options. I can either get rid of that type of trade, or I could review how to make it a little bit better. Maybe in that type of circumstance, my target was a bit too high, so it wasn't hitting it. Or maybe I was giving the trade a bit too much room. My stop loss was too big. All those things, if we implement them over many trades, right, if you hit your target a little bit more, or you reduce your stop loss a little bit, those things affect. If you can increase your risk-reward ratio over many trades, these things affect your profit. And as I talked about at the beginning, every little millimeter that you can improve on your entries, your stop losses, your targets, just move you that much closer into profitability. And every little millimeter that we're kind of giving away could, over many trades, turn a winning trade into a losing trade, or a winning system into a losing system. So we want to be continually finding and reviewing our trades, brainstorming. I also, on my charts, used to do this more, not so much now because it doesn't come up as much, but I'll still do it, is noticing my mind frame while I'm trading. If I start to get really eager to trade, I'll just note that on my chart, because then when I go back through it, I can see, I lost a whole bunch of trades right after I said I was really eager. That gives me something to look at and brainstorm ideas on. How do I control this? Going back to some of these things I talked about before up here, where I was talking about identity and how could I be potentially more disciplined in this situation. How do I control that eagerness? And we can do this through our pre-trade routine, just letting ourselves know what our problems have been lately, and before we start trading, rehearsing what we're going to do if that situation arises. We can also commentate the price action. So as the day is going on, I'm constantly reminding myself of things that I personally need to be reminded of. And then outside of trading, we can do that identity work type stuff, reinforcing what we want ourselves to be, not just wishful thinking, but actually like going through and really saying, I want to be this way because it's going to give me this, 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 and this, and this, and the way I'm currently doing it is giving me all these things that I don't like. And if we really go through that process over and over and over again, we start to change inside, which then changes our trading. We become less eager to take those trades, which have been causing me issues. Or maybe you're not taking profits when you're supposed to. You can do the same thing. So confidence comes from doing something so many times that you believe in it and you believe in executing it. This is really important because most people never get to that stage of confidence. They have the false confidence I talked at the beginning, where they're just talking themselves up. When they start the day, they're saying, I'm going to make so much money today. But it's a false confidence because there's no how behind it. They haven't gone through the process of looking at loads and loads of trades, looking at how they tend to emotionally respond to those trades and the best course of action for them given those emotions. So they end up just having this false confidence and then being, like in this emotional roller coaster where they build themselves up and then the market knocks them back down, and they build themselves up. Whereas the people who sustain themselves in trading are the people who just go into each trade and each day saying, I don't know what's going to happen today, but I do know that if I follow my system, I will make money over many trades. So the next trade, this trade could be a winner or a loser. I accept that. Is it a quality setup? Does it match my strategy? Okay, I'm taking it. And your emotions will still affect you, but it's much more even keeled than building yourself up and then getting smacked down. We're not building ourselves up in the sense that we're just giving ourselves false hope. We talk about how we're going to handle things, and we accept that there'll be losing trades and winning trades basically before every trade. Most psychology issues are alleviated by practicing so much that the method becomes second nature. So again, this relates back to that false confidence thing. We're not building ourselves up. We've basically proven to ourselves. We've looked at enough trades, and this is the problem with courses and why I recommend you should go through a whole bunch of trades, even in my courses, and look at your own trades and how you can improve them, because people just, take the course and then instantly start implementing it, and then they wonder why they have issues. Because they're not confident in the method. They have not gone through finding hundreds of trades, adding up how it all worked out, and then going from there. Instead, they just kind of jump right in because they want to make some money today. And that's not really how successful trading develops. You might get lucky and win some money, but it's not likely sustainable until you develop that confidence, which comes from just, I've seen this 100 times, 1,000 times, 10,000 times, and I know that over many trades it's going to work out, but this trade might not, and that's confidence. Not knowing the result, but knowing that if you continue with a process, the overall result is generally good over many interactions. You don't think about the money or not making money, you just execute. So this is a big problem. People come in and they're thinking about the money, they're looking at their P&L, they see that they're up some money, and they start to really think about how that could disappear or how it could get bigger. So they end up dealing with a lot of greed and fear of losing that money. But if our focus is not on the money, but instead on focusing on our process and saying, again, I've developed confidence because I've seen this 1,000 times. Overall, it generally hits my target, and if it doesn't, that's okay, because at the end of the month, I still make money if I just follow my process. Yeah, you just execute like any repetitive task in life, and that's only possible if you trade the same way all the time. And that does not mean your trading plan doesn't evolve. You will have a strategy. It'll probably start out very simple with just entry and exit rules and stop loss rules, position sizing rules. So it's going to be very short. It might only be a paragraph and maybe a drawing of the kind of pattern you're looking at. But over time, that's going to expand, and we're still trading the same way, but maybe I notice, like I said, I get really eager in certain circumstances, and that might be a bad thing. So then I might put in something in my trading plan for how I'm going to control that. I might also notice that the pattern works really good in certain market conditions, but then I tend to lose when market conditions change. Maybe it gets really low volatility or it's not trending anymore. Then I write in something into my trading plan for that as well. And so the trading plan expands. We're still using the same method, but we start fine-tuning it more. We start getting those millimeters back on, or getting more millimeters on our entries. How can we improve those a tiny bit? How can we look at multiple trades? Could our profit target be in a little bit different spot, or would a trailing stop loss work better? Would reducing our stop loss in certain circumstances help our trading? So, and then you can go through, look at your last 100 trades or so, and implement some of these changes. Just theoretically, add up all your profits and losses, see which way does work out better. And if we do this continually, then we kind of stay on top of what the market's doing, and we can adapt in a way, but we're not really just, a lot of people think of as adapting as changing. We're not just changing our method all the time, but we are creating rules that allow us to perform the best in different circumstances, whether it's emotional or based on the market. If you constantly try different things, you're going to lack confidence, and for good reason, and profits, because you're constantly trying something different. You have not developed this process of basically making it second nature, where it's just, yeah, if I do this over the next 10 trades, I'll likely make money. It's, you're very much questioning what it is. So this is basically a summary of this much bigger article. I've thrown in a lot of extra stuff. You can go to TradeThatSwing.com. You can type in day trading success rate in the search box here to find this article. Loads of statistics and how long it took people, things like that. Understanding it, obviously there's some flaws in these statistics. For example, 4% that we saw were able to make it, but maybe some of those people went to trade at home and were able to be successful. So we can only know basically what we saw, but I think the statistics are quite accurate. There's also details on the type of work to put in to become a successful trader, some of which we talked about in this video. So I think it's very important to understand all this stuff if you're going to go into this with the focus of becoming a profitable trader. All those things that we discussed are very important. So that's the day trading success rate, and also how to try to get into that 4% or so that are making a living, or the 10% who make a little bit.